Hi everyone, hope you're doing well. So I'm going to do a video today on pensions, and just remember, also it's never financial advice I give, but it's just some ideas that might kind of help you look into things, I suppose, or help you consider things. If you do like the content, please like, comment, subscribe. That'd be really helpful. In terms of this is for the UK, but for most people, they're going to probably have between 2 and 4 kind of normal incomes, I suppose, while they get to or get towards pension age, or whilst they're definitely in pension age. And obviously that could vary for different people, because obviously if you're continuing to work, you potentially getting that on top. But assuming you stop work or want to stop work when you're kind of getting into your late 50s and late 60s, then basically the main incomes you're going to have are state pension, but also it's a relatively modest amount, and that's assuming you've paid enough national insurance contributions to kind of get the maximum amount. But for most people, that's going to be under £12,000 a year. So although not taxable when you're receiving it, if kind of things stay as they are now, obviously it's not a lot to live on, £1,000 a month. So that's kind of the I suppose what some people might be relying on is that so you can get that until you're 67, but you may not pay tax on it, and that would just be per month. Another one that in the last few years has kind of come in the UK is with the auto enrolment pensions. So if you're doing that pay as you earn and so on, an employed person, most people are contributing, unless they've opted out, will be contributing 5% themselves, and their employer will be doing 3%. So obviously that would be an additional income, but also you can't get that until you're, I believe it'll be going up to 57 in the near future. So you think state pension 67, and then also you've got your workplace pension, unless you've opted out, would be 57. And I believe if you do a self-invested personal pension, it's around 57. It will be shortly before you can start drawing that money. I will be talking about another account in my next video, on another option that kind of might be able to bridge the gap, or a couple of accounts that might be able to bridge the gap between those two. But yeah, that's kind of a ballpark estimate on kind of what kind of incomes you can expect to have once you are approaching retirement age. And obviously the more you have in your workplace pension, the more likely you'd be able to retire at that kind of, at the moment, 57 or so age. So not financial advice, but just something to think about.